From a snapshot of US consumer sentiment to bets the BOE could keep up the waiting game. These are the stories to watch in business and finance in the coming week. The University of Michigan's preliminary reading on consumer sentiment lands on May 10th. It will give a snapshot of their inflation expectations and economic outlook. Months of stubborn inflation have threatened to disrupt the so-called Goldilocks narrative of resilient growth and cooling consumer prices that have helped drive stocks higher. Any signs in the report that higher prices are weighing on sentiment could encourage the Fed to keep rates elevated. Investors are scouring the globe for shelter from turbulence in U.S. markets shaken by the Fed's reluctance to cut rates. The S&P 500 dropped more than 4% in April. Treasuries had their worst month since September. Investors are trying to diversify, and London's FTSE 100, considered a hedge against the tech-dominated S&P, is near record highs. Stocks in high-growth India have logged 3 months of gains. But insulating a portfolio from Wall Street's swings is tough. The long-term correlation rate between Europe's Stoxx 600 and the S&P is almost 90%, investment bank Baird estimates. The Bank of England publishes its May rate decision on Thursday. While earlier this year, rate setters talked openly about the possibility of rate cuts, hard data and business surveys have painted a pretty mixed picture of price pressures in Britain's economy. Investors are increasingly betting the BOE could even wait until September before cutting rates. Monthly economic growth data is due on May 10th. The Reserve Bank of Australia meets on May 7th. No policy change is expected, but markets will watch for any comments from Governor Michelle Bullock closely. Having been spooked by inflation figures, markets narrowed the odds on the RBA having to raise rates once more, though some of those bets were paired after Australian retail sales fell unexpectedly in March.